So as any other trader, you first do what we call the top-down analysis. Yes, you first do top-down analysis, which is basically starting from higher time frames,
okay,
up to smaller time frames. And for me, under higher time frames, under top-down analysis, I will start from the 12 months,
okay,
up to the weekly time frame only.
Okay.
So basically, my higher time frames is 12 months, 6 months, 3 months, and 1 week.
Okay, you don't use the monthly.
No. Sorry, it has also to be here.
Okay.
So basically, I start from the 12 months, 6 months, 3 months, 1 month, and weekly. Some mistakes traders do, they start from the 1 month. But I always start from the 12 months, 6 months, 3 months, 1 month, then lastly, weekly.
Okay.
Why? Because weekly is the most important time frame, and the higher time frame sets direction for what we call the middle time frames. And those middle time frames, or what sometimes people call, the traders call busy time frames. And these busy time frames are daily, 4 hour, and 1 hour.
Okay.
Basically, weekly is the one that controls the middle time frames. Yes, which is daily, H4 and H1.
Okay.
So I always just check here just to see the long-term direction. Because even the market makers only use these ones for long-term. But you're going to notice that they use weekly for current direction. Because the weekly chart or the weekly time frame, it's basically manages the middle time frames. And for the big boys, or what we call the liquidity makers, they use the daily time frame for executing. Then they use weekly for direction. And remember, for us retail traders, we are designed to follow the
market makers.
Yeah. So this is what I always do in the morning. I need to first know what higher time frames are communicating, which is basically 12 months up to weekly time frame. And I'm going to put more focus on the weekly time frame, as I'm going to show you what I look for in the weekly time frame.
Okay.
After understanding what weekly is communicating, for example, let's assume I open up the 12 months. I will just check the 12 months just to see the overall bias. Okay, 12 months is buying, it's okay. I don't need to focus there a lot. I just want to see what has been happening for the whole years.
Okay.
Then we have the 6 months. I'm also seeing what happened in the 6 months. I'm not going to execute. Then you go to the 3 months, you see the same thing. Then I open up to the 1 month, you see the same thing. Then lastly is weekly. Now in the weekly time frame, I'm going to be looking at the structure. At the structure of the weekly. And for weekly, I'm going to look at the current weekly break of structure, the weekly time frame. We are not going to focus on these old ones. Because these old ones are done. And we are going to focus on the current weekly break of structure. Because the one that sets the direction for the time frames, which are the busy time frames, which I'm going to show what we look for.
Okay.
So this one we just check for the sake of checking. The reason also why we are using the weekly time frame for major direction is because retail traders, we are only made, most of the time we always be taking intraday.
Yes.
And of course, this time frame for weekly favors intraday, favors swing trading, because intraday is the one that produces swing trading.
Yeah.
So you basically look at the current weekly break of structure.
Yeah.
Because price likes the current formations, or what you call the current dominancy.
What if the weekly, for example, we had a structure like this, now we are here, let me say in a range. Yes.
Okay. I think I want to explain what we look for in the weekly, if it's okay.
Okay.
And now the mistake traders do also, don't only start from the weekly if you're going to use our concept. Just check for the sake of checking. If you know price is on a 3-month support, still you have to wait for weekly to change direction.
Okay, here do you, someone could say, I'm looking at the current 12 months candle, or you look at the structure.
Oh, I basically look at the structure.
Yeah, not the candle.
Yeah, because the candle doesn't give the full information.
Okay.
Because the structure is the one that speaks a lot. So basically, after understanding this concept, now we need to see what do I look for in the weekly. So in the weekly, we're going to look at first the so-called direction, or what you mean by the trend. Are we bullish? Are we bearish? Or are we sideways? But remember our rule for top-down analysis, we mark the current weekly break of structure. Because the current formations of weekly, not a candle, it's always, structure. These are weekly candles going up, weekly candles going down, like that. So we mark the current weekly break of structure, yes. So we need to see, is it bullish or bearish? So after understanding the direction, we have what we call phases.
Okay.
Phases, or what you call cycles.
Yes.
Now, what do I mean by these phases? Phases, we have 3. We have what called the breakout phase. The weekly time frame will break structure like this. So this is called the breakout phase. Then you have another phase called the pullback phase.
Okay.
Or the retracement phase.
Okay.
Then we have what we call the continuation phase. There are only 3.
The continuation.
Yes. Price will be, let's assume it has left the weekly and is going up.
Okay.
And this is what we call the continuation phase.
Okay.
So if you understand this, intraday will be easy, or how to play with the busy time frames that you're going to see, what we call the middle. Okay. So once you understand the direction and the phases or the cycles, so you can go down by understanding this. Now, this is the thing I will need to warn of traders. Now, let's say, for example, if weekly is in a breakout phase, price has broken the weekly higher high. This is the higher low. So price will keep on shooting up. What sometimes for us we call it the markup phase, because price keeps marking new price levels. This is 100, and it goes to 200, 300. Now, some mistakes traders do here, as we shall see in the middle time frames, the mistakes they do. The pullback phase also traders misfire here, as we are going to see how they misfire. Then here it's the best. Now, for us, we always recommend the continuation phase. This one is basically the best for beginners and intermediate traders, or the advanced. Then if you start mastering your strategy over and over, then you can be able to go
into the
pullback.
Okay.
Because the pullback phase is that the market makers are the ones who control the pullbacks. So no one can know when a pullback is ending. So this is the reason as to why the pullbacks are more dangerous to be traded.
Okay.
But I'll show you how we trade them, and also this breakout phase.
On the advanced.
When I'm going to show you in the busy time frames how we play with it.
Okay.
After doing top-down analysis, I'm going to go to the next phase, which we call refinement analysis. Now, this is the second one. Refinement analysis is basically to pick liquidation levels, or to pick the true levels of reversals, or to see whether time frames are going to align with a higher time frame. To increase my chances of winning, either to be in the positive or to be the negative.
These are like marking your point of interest.
Yes, marking your points of interest.